minutes now, just allowing for, and certainly appreciate everyone taking time out of the day, whether it's 3 o'clock on the East Coast, or if you're all the way in Hawaii, good morning to you, aloha. Welcome to the course on dental office lease negotiations, or in terms of negotiation or renegotiating the terms and rent of your dental office lease. We should look to finish up here just about 6 o'clock Eastern time. Just kidding for those of you who are on your lunch. It is just a 1-hour webinar as well, but just to make sure everyone's awake here. But this is a particular subject that many don't, maybe the word is take seriously or think about or read into, and it becomes a very critical component and can very quickly become a very expensive issue for the practice. And since we were incepted 26 years ago, it's really been a component where it has impacted dental offices across the country in a variety of different ways, which we're going to go through. And unfortunately, dentists continue to sign poorly structured lease that don't allow them to have the flexibilities or protections in place that they need in order to run their practices. So my name is Ryan Cathers. I actually manage and oversee our healthcare leasing team nationally. And before we kind of get started here today, I do have an initial poll, if you will, with a few questions just to get a sense of the attendees today and help cater this course as much as possible towards those those situations that are out there as well, to give me a sense of the room. Now, again, typically this is in person, so I do love interaction. I highly encourage the Q&A section as we go along. And again, those that are relevant to the topic at hand, then I will be addressing. Those that may be covered later on in the webinar, I will address them at that time. And then any other ones, I will leave some time at the end to open the floor as well. Now, 85, 54, and 80. 85% of dentists have a lease that can prevent them from ever selling a practice. 54% of dentists across North America are overpaying in rent for their practice. Many believe they are, and some cases obviously are not. 80% of landlords structure their lease to give a right to at least 50% of the proceeds when a practice is sold. 85, 54, and 80. Now, I think it's very important to know a little bit about us for those of you who may be unfamiliar with our firm. So we were actually started by dentists for dentists, and we're a healthcare and dental specialized tenant representation firm. As I mentioned earlier, we've actually been doing this for 26 years now, and we've now negotiated over 12,000 dental and medical leases across the country. What makes us very unique is we have everything in-house. So we have an in-house legal team comprised of highly experienced real estate attorneys and lease negotiators with a background of healthcare and tenant representation. We have an in-house leasing team comprised of ex-brokers and the data in terms of rental rates and comparables to understand if you are overpaying, if you're paying fair market, or obviously underpaying in rents. We have an in-house consulting team that essentially work alongside the legal and leasing teams to essentially help develop a strategy for the negotiation. So it's all around a very collaborative effort. On an annual basis, we now represent a little over 500 doctors each year throughout North America. We deliver over 100 CE accredited seminars on an annual basis. So typically they are in person, as I mentioned earlier, as a seminar live. Now we have, obviously, given everything going on in the world right now, everything is virtual. So we are hosting webinars. So we are hosting regional webinars and national webinars across the country as well. But to give you an idea in terms of some of our breadth in the real estate market. So we lecture at most of the major dental conventions: the Greater New York, Pacific Dental, Yankee Dental, California Dental. We truly work with dentists nationwide. Now, the purpose of today's webinar is fourfold. Firstly, an update on rental market trends. So I had our leasing team pull a few reports. There's some of the different various areas across the country, just to give everyone a bit of a snapshot into it. And we'll get into that in a little bit more detail momentarily. Secondly, the importance of an office lease agreement and how it can impact you. The key terms and conditions within your office lease agreement, and again, how they can impact you. And some tips and tricks of the trade, so to speak, to put you in the best position for success. So for those on our West Coast and San Francisco, so keep in mind, these are some of the rental rates that are in particular areas. It can vary from block to block, property to property, building to building, but wanted to kind of give a general trend of what we've been seeing. Now, this graph here shows the downtown component of San Francisco. So we're not including some of the Bay Area and East Bay and things of that nature as well. So for those Californians here on the webinar today, so this does show on a per year basis. That's the way that it's calculated as well. Now I know throughout California and parts of Washington as well actually go on a per month basis. So it's averaging, as you notice, the market rental rates, obviously since COVID-19 has started, has been significantly dropping. So dropping from, I mean, in terms of downtown, you're looking at less than $5 a square foot, dropping down to just about, down to the $4 a square foot range, while vacancies have obviously significantly increased as well. In New York, very similar. So what you'll notice is a very similar trend from the vacancies and the rental rate components as well. So buying versus lease. This is a question that I get on a regular basis. And I do apologize, some of those graphs were actually duplicated by accident. But there have been various different trends throughout. Rental rates have decreased, vacancies have increased, which we'll touch on a little bit more throughout the presentation. Now, buying versus leasing. So this is a question I get on a regular basis. Should I buy property or should I lease space? I hear all these benefits with X, but I'm considering Y. So let's go through them. So if you're buying the space, what are some of the pros and cons? And I'm not here to say one is better than the other, because it all depends on your goals, your vision, and what you're looking to do. So if you're buying property, A, it requires a large upfront financial investment. You're not only buying a property, but you're also building out a practice. You become a landlord. So you're not just a business owner from a practice, you're also a landlord. So you're essentially having two jobs. Now, some are very comfortable with it, some that might overwhelm. There was a doctor I was laughing with last year who had to walk in with a plunger, as he was his own maintenance crew to fix a toilet. You can earn rental income. So whether you've sold your practice and you retain the property and have that rented out, or if you have a multi-tenant property, you have additional rental income. You have greater flexibility on how to use the space. You are the person who you need to ask permission for to change anything. And you have freedom to control the property. If you're looking to extend the property, the house, things of that nature, or change the way the parking lot is, you have that ability to do so. Now, leasing requires a smaller payment, which means if your goal is to utilize high quality fixtures or equipment or open up multiple locations, you have greater working capital to do so. You also have the flexibility to relocate or expand. So in many cases, buying can be a great investment. There was a situation with a doctor who it was outside of Boston. You could give you a general area where the town, unfortunately, over the last 5 years, not COVID related, prior to, just taken a major dip. And unfortunately, he's had to relocate his practice to the next town, but he owns the property. And now he has to deal with the mortgage and the empty space that comes along with it. So again, there's pros and cons of each. Now, what brings them both together is the dental lease. Even if you own the property that you practice out of, you need a lease in place to separate the practice entity from the real estate entity for a number of different reasons, not just a tax and liability purposes, but your real estate plan moving forward, or God forbid something were to happen. Now, how to maximize your leverage. You are a top tenant. You invest a large amount of money into the space. You stay long-term, and you typically pay your bills. Dentists last year, I believe from a source, the bank and lender, had a 0.7% default rate on their loans. So the long short of it is you don't default. So you are a top tenant for these types of landlords because you're not a headache. They're not chasing you for rental rates or rental payments. They're not worried if they're going to get your next month. Now you have to put yourself in your landlord's shoes. So the age-old saying of what's in it for me? Exact same thing for you as a tenant. And then think about it and switch hats as a landlord. What's in it for them? Where does leverage start and where does the leverage begin? What is a lease? Why would it be good to have a lease with this landlord or between my real estate entity and my practice entity? Why is it important? It's the relationship between you and the landlord in that space. Most tenants want a space that they can be happy practicing in, where they can bring their patients and treat them. Landlords want a good tenant who's long-standing and pays their bills. Now, if you do the math, so many here, and when I'm in person and a live seminar speaking, I always ask, I survey the room and ask who has read their lease cover to cover, start to finish. And typically, on average, we have about 40 doctors in the room. 0 to 2 raise their hand. The only thing that majority of dentists look at are term and rent. And not just rent in the long term. What is my monthly rent that day? You don't think about, I'm going to be paying over $2 million over the course of 20 years to my landlord in the form of rents, if not significantly more, with escalations involved. So you're not just committing to, when you're starting a practice or renewing your lease, not just committing to $5,000 a month. You're committing to $5,000 a month over the course of 10 years with escalations. Plus, if you don't plan to relocate, you're committing to further term. Plan, prepare, and prioritize. So anytime you're looking to or thinking of approaching any situation or opportunity, whether it's to stay, to relocate, acquire a practice, start up a new practice, renew your lease, expand, plan first. Prepare what the plan is. Go through, do your research. Does it make sense for your situation, your goals? And prioritize, if there is a negotiation involved, what are some things that you're willing to concede on in order to get some more of the pertinent items? Have your cake and eat it too. It's not only the landlord who has the leverage. Well, they have the space, they own the space. Absolutely. But they need a tenant for that space. That's the business model. Now, with the increase of vacancy across the country, as you may have seen, now might be finally the time to relocate the practice. Maybe not in all circumstances, but for those that have been debating it for years, they're in a building that has seen better days. It's becoming vintage, it's old. This may be finally the time to relocate the practice. Now, why is the office lease so important during COVID? The location is the foundation of your practice. Location, location, location. The lease ties you to that space. Now, failure to pay can be catastrophic for the practice. If you're ever wondering, should you pay rent? Absolutely pay. There's conversations I've had with doctors where they say, well, look, it's just, it's a down month. I'm just not going to pay, and I'll pay them next month. Or I'll catch up later, but I'm not going to have the conversation with my landlord. And unfortunately, what that does, it puts them and you in a very particular situation where we'll touch on a little bit, but the default section of your lease. If you don't pay rent, it can have a number of different triggers that are much more expensive within that default provision. Investment and cost to build. Depending on where you are in the country, it can cost anywhere $200 to $300 a square foot. Sometimes less, sometimes much more, depending on where you are and the quality that you're looking for. The point being is it's expensive. The lease ties you to the space, and once those leasehold improvements are affixed to the premises, they become the landlord's property. So if you were to move, they stay there. So it gives you the rights to utilize those fixtures and keep you in that space. It's very difficult, expensive, and time-consuming to move. Typically, I'll survey the room to see who has relocated or who has known someone to relocate. I can tell you it's not a fun situation. On average, to relocate a dental practice, keep in mind this average, depending on where you are, it can be more. But on average, it takes 18 to 24 months to properly relocate a practice. And that's from just concept or idea, from needing to or wanting to move, to finding a space, negotiating the lease, designs, permits, construction, to doors open. 18 to 24 months. Expensive, time-consuming, and a headache. And it can make or break the sale of your practice. Would you prefer it works as an asset or a liability? The lease also gives you leverage. It gives you control of the space. If utilized properly, it can help you win in the negotiations. Now, what should your office lease do? First and foremost, I think everyone would agree, it should provide fair and affordable financial terms. But I'm not just talking about rent. Obviously, a big part of it. There's other components that are built in, such as most of you will be on what's called a triple net lease, whereby there's a base rent and an additional rent made up of taxes, insurance, and maintenance, or common area maintenance, and you pay your proportionate share. Now, unfortunately, what landlords have realized is they can utilize it as a profit center. So by no means, not all of them, but many of them unfortunately have, and overcharge, particularly on the CAM charges, the common area maintenance part, and overcharge their tenants. There's a doctor who had sent me their reconciliation statement that they had received from their landlord, and there's a $4,500 miscellaneous charge. So I asked, what was this for? I said, I don't know. Well, did you pay it? Yes. Did you ask what it was for? No. Things like that are extremely important. You should know what you're paying for. So we look to include into the lease is language such as adding, detailed and itemized statements that you're to receive each year. See what the actual costs are. Now, who was it? Or who did the expense go to? Why? When? And the right to audit them, to have your accountant review the books. Other components such as free rent or fixturing period, the time where you have the ability to build out the space and construct, but you don't have to pay rent. And then additional months of free rent after opening to alleviate some of the financial burden. Or tenant improvement allowance, the money that the landlord's willing to give you to help outfit the space. Now, many think it's free money. Unfortunately, nothing's free. They bake it back into the rental rates that you pay. Now, that being said, again, more is not necessarily better, and less isn't necessarily better. It depends on the evaluation that they've put on it. Sometimes, in some cases, it might be more beneficial to take more from your bank or lender with interest rates. Or maybe more beneficial to take more from the landlord, again, depending on the situation. Long-term stability and security. In most cases, we recommend signing a 10-year lease. Most, not all. And having multiple 5-year options to renew to allow for as long-term predictability for the practice as possible. If you're not looking to relocate, it's like buying in bulk. Typically, the more you offer, the better deal you get. It also comes into play when you're looking to transition. Banks now need, typically, in most cases, 10 years of term left on the lease in order to finance an acquisition. And that's whether it's in the form of initial term and or options to renew, as long as the options are transferable to a buyer. Minimize risk and exposure. So many of you, whether you know it or not, have either signed your lease personally or have provided a personal guarantee. What this essentially means is if there's ever a dispute between yourself and the landlord, they can come after you personally. Now, very common as a new tenant to the property, but as you've shown covenant as a tenant, that's when that needs to be addressed, either removed or limited. And there's a number of different ways of doing it. Maximizing your flexibility. So incorporating in a right of first refusal, whether it's to purchase or to expand. So if your goal is to grow the practice or to potentially invest into the real estate, having this gives you the first right to that. So even if there's another bona fide offer, you have the ability to make a choice. And again, it's an option, but not an obligation. And again, it enhances your ability to eventually sell practice. Again, do you want it to work as an asset or as a liability? Now, what's in your lease? So we're going to go through a couple of provisions in your lease and kind of dissect what are some of the potentially problematic items that are in it. Now, this is the option to renew. The option to renew is the option, but not the obligation to extend your lease further. Now, this is found in 90% of the leases we're negotiating. Again, we represent over 500 doctors each year. And most of these have been previously negotiated by a quote unquote dental specific real estate attorney. Now, typically in our live seminars, I would take a minute for everyone to read. Now, given this is a 1 hour CE course, we'll go through a little bit quicker and touch on certain points. So particularly the first one being in the very first sentence. That could be potentially problematic. So provided that Dr. Joe Black shall remain as tenant. What this means is this option is non-transferable to a buyer. It's personal to Dr. Black, which means when he looks to sell, he needs to commit to 10 years today, for example, in order to sell the practice. There was a doctor who had negotiated a 5-year term with a 5-year option to renew exclusive to her by her local attorney. And she conditionally sold her practice predicated on the option transfer. And the landlord had sent her a notice, which she had forwarded over to get our opinion, that said, happy to amend this lease. It was a sentence like this, and allow the option to transfer to the buyer for $120,000. In her email, she was wondering, this is unethical. This can't happen. This is extortion. What is your opinion? A few other choice words, which I will not repeat on the webinar today, but the long and short of it is you agreed to it. Now, landlords are also savvy. So in many cases, it's not as obvious as Dr. Joe Black. In many cases, it'll say something along the lines of original tenant, personal. Now, this is just one component of the option to renew. Many problematic items within this section that are found in 90% of the leases that we're negotiating that need to be addressed or removed. So we have our question here, and the question being, would there be a standard paragraph for assignability of a lease used to be standard? So great question. So in terms of that, kind of perfect timing for it. So think of it like a car. There's going to be a number of different provisions that all tie in together. You need all 4 wheels to be on the car in order to go somewhere. So where this becomes a component is not just in the option to renew, but in this section here that we're about to go through is the assignment section of the lease. I believe this might be what you're referring to, where it essentially outlines the transferability of your lease in the event that you look to sell the practice. So in terms of, is there a standard paragraph for assignability? So this is found in 75% of dental leases we review. Again, many of which, quote unquote, negotiated by dental specific real estate attorneys. And so this is the quote unquote standard paragraph you will see. What I can tell you is if a landlord says that this is their standard form lease, every landlord has their own version of it. There's no commonality between them. Now, particularly through California, there's a particular one called the air lease, which again, very landlord friendly. But there is no standard language for it. It's all up for negotiation. Now, typically when they present it, it's all in a landlord's favor. So going through this section and through the potentially problematic items or things that could be, the first item is that you need the landlord's consent in order to sell the practice and transfer the lease. Very common in commercial real estate. What's unusual about yours or these types of provisions is that in many cases it states what consent shall not be unreasonably withheld. And many unfortunately believe that that protects them. The question is, what's the definition of unreasonable? And consent based on what? There was a doctor who, it was one of our more extreme situations that we were notified of, who was quote unquote family friends with their landlord. Been there, I believe it was 38 years. The landlord was there for 22 of them, was a patient of theirs, and he conditionally sold his practice, predicated on the lease transfer. And so he went to his landlord, his family friend, as per his lease, as per consent. And the landlord said happy to, on one of three conditions. One, rents are increased 35%. Two, you pay me 50% of the sale proceeds, 50. Or three, I terminate your lease. I can tell you they're not family friends anymore. There's a few choice words to be had. Consent process and concerns and things of that nature, it needs to have a proper process built in. What it goes on to say is the landlord shall have the ability to A, approve, B, deny, or C, terminate the lease. Now, a question I get very regularly is, well, why would they want to terminate the lease? In many cases, they wouldn't. The cases they would are for a few common reasons, being A, they don't like you as a tenant, B, they want a different tenant, or to change the purpose of the space and repurpose it, C, as leverage to gain some sort of monetary value out of the transaction. Gives them all of the flexibility in the world. But let me ask you this, how much is your lease worth if it's terminated? Now it goes on to say, the landlord shall have the right to revise the minimum rent to be paid during the remainder of the term to the greater of the then current market rent for the leased premises, or 15% greater than the then current rent. Essentially meaning rent's going up at least 15%. How does that impact the purchase sale or the practice sale? If they have to pay higher rent, less probability, does that change the purchase price? Could the buyer walk away? Furthermore, should the tenant receive from the assignee or subtenant rental income, cash, goods, or any form of consideration in the connection of the assignment of this lease? The key component there, cash or any form of consideration. This is referencing sale proceeds. Essentially saying that the landlord's going to be entitled to a percentage of them. Now, again, one of the more extreme circumstances that it doesn't happen as common, where they were looking for 50%, more common that they're looking for 15 to 30, when in reality, they should be receiving 0. It goes on to say, notwithstanding the landlord's consent to any assignment or subletting, the tenant shall not be released from its obligations. What you'll also notice in this sentence is that there's no expiry. So if this tenant continues to renew, you still remain liable. And if you've signed the lease personally or provide a personal guarantee, that's you personally as well. Very, very critical to have some sort of limitation to that or release. These are just two provisions that we've gone through in your lease so far, among countless others. But just to give you a bit of a snapshot into each provision, how many different problematic components are within each one. Some of the other office traps that you'll find in your lease are not limited to this, but gives many examples. For example, a demolition clause. So where the landlord has the ability to terminate your lease if they look to redevelop the property. Typically, it's on 30 days notice. Or missing a death and disability provision. Very, very important to have this incorporated in, as God forbid something were to happen to you and you're no longer able to practice. You or your estate would have the ability to to essentially either terminate the lease or assign the lease, and it would skip a number of the assignment terms and provisions based on the extreme circumstances. Essentially, it works as a free insurance policy and gives you flexibility, because in many cases, depending on where you are, a doctor nearby will prefer to buy the charts and is not interested in the real estate. They just want to merge the charts into their current practice nearby. So it gives you the flexibility to sell quickly as a full practice or partially as well, you or your estate. Now, landlord negotiation strategies. And again, I encourage, if anyone has any questions, we will be going through questions at the end, if you do have any throughout. But what's working? When do I start? When do you start? Typically 24 months out from expiry. We're going to touch on this a little bit more in just a minute, and some of the different components as to why. But leverage your leverage. Again, as a dentist, you're typically paying rent on time, you're long-standing tenants, and you increase the value of the space with your leasehold improvements. I'm going to show you restaurants, the nail salon, they are not doing the same. Particularly if you've seen many businesses close down. Now, a big question is, do I renew or relocate? All depends on the opportunity. What is the current situation that you're in, and what are some of the opportunities around in the area that have potential? I'm a big believer in looking behind all doors and narrowing down. But you have to know your KPIs. And for those who are unfamiliar with KPIs, it's your key performance indicators. What would be the reason to relocate? Because keep in mind, in most cases, if it's not to a pre-built dental practice, which typically isn't the case, it has to outweigh the new build out and the investment for that. Similarly, in the investment into a property nearby. What is the return on investment and the timeline? Rent relief or deferral has been a major discussion through since the beginning of COVID-19 and continues to be as well. There are some where not all practices are thriving, where there's some that just need a little bit longer depending on where the regional shutdowns have been or increases in numbers. So if there's any need for rent relief or deferrals or abatements, things of that nature, know your situation, how to be able to leverage that with the landlord in order to get results. It's really been an unprecedented opportunity. Vacancies are significantly increasing and continue to rise. Rental rates are decreasing. It's an opportunity to now reset some of the financials. Now, just so everyone knows here as well, not in every single case is a landlord willing to reduce rents, or significantly for that matter. All depends on your situation, the property, the landlord, and geography of that as well. Now, what do you do? Take action. Know your timelines, know when to begin conversations, and how to begin them. So to touch on that a little bit further, the tenant lease cycle. So again, we recommend beginning the negotiation process at least 24 months out expiry. And this is for a few different reasons. Again, it takes at least 18 to 24 months to properly relocate a practice. Depending on where you are, if you're in Southern California, depending on the pocket, in many cases, it takes 3-4 years. Another reason is your option to renew deadline. Typically, there's some sort of form of 3 months notice, 6 months, 9, or 9 to 12 months, some sort of combination. You want as much time prior to that critical date, not just your lease expire, but the option to renew deadline as possible. The closer that time gets, the less leverage you have. because once that time is surpassed, then the landlord's just not under the obligation to extend your lease further, or if you have no options. So you want to know early if that is the case or not, so you can properly plan and not overpay either here or somewhere else. Very, very critical from this standpoint. Now, for those of you who might be month to month on this webinar, absolutely urgent situation, not to say all leverage is lost, just a very different type of negotiation and strategy. But I never recommend any dental practice to be month to month, as you are leaving the leasehold improvements and your business exposed. Upon 30 days notice, you or the landlord can terminate the lease. Always have some sort of term, and that can vary based on your goals, where you are, and what your plans are too. Now, critical dates and risk analysis. So this is one of the services that we provide. It's typically a question that I get, and it's essentially a lease review, where it's $1,500 or $1,495. And essentially what occurs is an economic and legal analysis of the lease, where our leasing team does their due diligence. There's the rental rates, comparables, to determine if you're overpaying in rent or if it's fair. While our legal team goes through whether it's a letter of intent, a full lease, and highlights all of the risks, exposures, and liabilities. We then schedule a call with you. Typically, it's about an hour long. We go through your plans, your goals, and visions for the practice, the lease, and how those items can impact you, and then essentially a treatment plan at the end. Now, I want to thank our sponsors at Henry Schein today, as they've actually covered the cost for everyone attending this webinar today to receive that lease consultation complimentary. What I will need on my end is the original lease, plus any extensions, amendments, estoppel certificates, assignment agreements that the practice was purchased, anything that supports the lease. If you do not have a lease, if you're looking and thinking about starting up a practice or acquiring a practice, we do walk you through the process, what to expect, some of the tips and tricks through that as well. Whether it's easy to scan an email or fax over the documents, whatever is easier there. I have all my contact information below as well. So a poll is going to be popping up on your screen momentarily. For those of you who are interested in either just learning more about the situation, learning more about specifically your situation, I highly encourage the lease review. It dives much deeper with all of this content, more specific to your situation and your goals for that as well. So whether, again, you're looking to start up a practice, acquire, looking to renew your lease, expand, transition, or as an owner occupant, how to put a lease in place and what type of lease and how it should be structured. I highly encourage you to take advantage of the complimentary lease review. Again, there's no obligation. It's covered by our sponsor at Henry Schein, so we certainly appreciate that as well. So I will open the floor to any questions as well. I see one here to kick it off, but please let me know if you have any questions. Give me a quick call. Give me an email if you have any questions prior to as well. So the first question here, does our company represent the landlord dentist who sold the practice recently? So it depends on very specific situations. So if we're there to kind of help facilitate the process of a proper lease, and if you think about the content we went through today, we focus obviously from a landlord standpoint. Now, what we advise our clients, if there's some that are, the dentist, for example, which is not uncommon for us, where they are either going to become a landlord or are the landlord, then we advise them throughout. There's items that we recommend, not including in like the sale proceed language or termination rights, because it's not attractive to a buyer. So it should always be a fair lease, but with protections obviously put in place based on the situation and the goals of our clients. But primarily tenant representation, only very specific cases for landlord representations for dentists specifically. A common question here, actually, I get. So I appreciate it as well. It seems to be every webinar and a very similar one. So the question is, I have 2 months left on my lease. I expire end of January, and is there any point in negotiating now, or should I wait till the next renewal? And depends on your lease. I mean, it all depends on situation to situation in terms of what occurs and what should happen through that process. Whereby I would never advise anyone to extend a problem. So if there are in fact issues within your lease that could be detrimental to the practice, I never recommend extending them. Now has been the best time to be able to address a number of those items, particularly as you're looking to renew your lease. In a time like this, landlords are loving that. But great question. So we have one here. Bear with me while I read it. It's a little paragraph. So the gist of it here is, this is a doctor in New York City. The office, been there a long period of time, and they found out that there is another tenant that is paid less per month for, we'll say, just from this paragraph, a less desirable space. So I mean, the first question is it legal? Absolutely. I mean, that's why there's firms like ours, for example, where we're assisting dentists for the last 26 years, because there's other representation that's unfortunately just not know the nuances of dentistry, or in this case, just in general commercial real estate. Your lease and rental rates are only as good as the person negotiating them, because others can go in, and if they're not as good or don't know how to leverage or how to structure things, every lease in that building is probably different. Same template or standard form. If someone had a better lease negotiator, I can assure you they're in a very different situation. So in terms of it, is it legal? I mean, as far as I know from the general question, yes, absolutely. There's rental rates that are very different regardless. Now, some will change based on size. You again, typically buying in bulk, you typically get a better deal. But again, it all depends on who's negotiating as well. That's a big component. Yep. So if they're paying less for a more desirable, bigger office, then I mean, it's tough to say at a high level from what I've gotten here. If it's a bigger office, that does have an impact in terms of rental rates. Now, in terms of what you're paying compared to them, keep in mind this is a common mistake that many make. And again, obviously I don't know how much, just based on this so far, but many will say, well, I'm paying $5,000, but my neighbor just told me they're paying $3,000. Keep in mind, might need to dig into that a little bit deeper. Is that just base rent? Is that all in? What's the square footage? Things of that nature as well. But be very careful. Many leases have structured in it that if you talk between tenants, you can be held in default. You could be held for confidentiality within your own lease. And the reason why they have that in there is because they may have given a different tenant a deal and not you. So be very, very careful in terms of how you utilize that information, and take it with a grain of salt. But in terms of your situation, doctor, again, to really determine if you're paying significantly more or why, and particularly the why around it, the lease consultation will help with that. But that hopefully answers kind of at a high level some of the initial reasons. The long short is your lease is only going to be as good as it's negotiated. There's many cases where we're negotiating the different clients' leases in the exact same building, and they all start very, very different. So that's a big aspect as well. A question here is in terms of, if we want your assistance, how much is it? So, good question, very common. So, really depends on the scope of the project. Part of the lease review gives us an ability to figure out the scope. You'll talk to you about your plans, your goals, what you're looking to do, the quality of the lease. If there's a ton of work or very limited work to do or no work at all, gives us an idea of what the scope is. And then at the end, if you would like your assistance or are curious about it, I'm happy to walk you through kind of what that would look like and how we'd be able to help if so. Perfect. So I'll leave the questions for there. I know many are either just on lunch or pressing through in between patients. If you do have any additional questions, feel free to send me a quick email, give me a quick call. Happy to answer any kind of preliminary ones as well, or any kind of one-offs. If you do have a number of questions, I highly recommend the lease consultation. It's complimentary and it'll give me a better idea of your specific situation, and I give you kind of proper and more specific feedback, and appropriate feedback and guidance on the exact situation and typically insight into your situation. But it's been a pleasure. I hope everyone found value and enjoyed the course today. In the meantime, be well, stay healthy, and have a great rest of the day.